Welcome to Currency Live, a new series of live streams hosted by me, Chris Harmse, co-founder and chief business officer at BVNK, the leading provider of stablecoin payments infrastructure. Our mission at BVNK is to accelerate the global movement of money by bridging blanks and blockchains. Currency Live is all about the people and the projects at the heart of the shift. Now, we all know that regulation has a big impact on money movement. So I'm excited to welcome our guest today, who knows a thing or two about that. Let me welcome Patrick Hansen, Senior Director of EU Strategy and Policy at Circle, the sole issuer of stablecoins USDC and EURC, and the first major stablecoin issuer to be MiCA-compliant in Europe. We're a multi-stablecoin platform here at BVNK, and Circle is one of our key partners. Welcome, Patrick.
Hi, Chris. Thanks for having me. Super honored to be guest number one.
Likewise, super happy to have you, and let's definitely kick this off with a quick fire round. So to get us warmed up, as there's lots of nuanced discussions surrounding stablecoins, but for now, let's imagine that it's simple. I'm going to ask you a series of questions, and the rules are basic. You can say yes or you can say no, and maybe I'll allow a one sentence answer. Are you ready, Patrick?
All right, yeah, rapid fire straight away.
Let's go. Are stablecoins ready for mainstream use?
Yes.
Will stablecoins replace payment rails like SWIFT?
I'd say not necessarily replace, I'd say complement.
Are stablecoins just an emerging market solution?
Definitely not. They're like both an emerging market, but also a solution for our more industrialized economies.
Is there still a place for unregulated stablecoins in the market?
There's always a place for unregulated activities. It depends what and where, right? Here in the EU, it will be a very small place. That's safe to say.
Will we see stablecoin regulation in the US in 2025?
Hopefully, finally over the finish line next year.
Awesome. And finally, and I'll give you a one-sentence answer here. What's the biggest challenge facing stablecoins right now?
Oh, so that's tricky in one word, right? But I would probably say, and you're tackling that at BVNK, I would say the last mile.
Awesome. Thanks for taking part, Patrick. A couple of tricky questions in there. So I do want to talk to you about the shifting stablecoin market in Europe, especially now that the final MiCA deadline is looming. But before we do that, let's dig a bit into your story and how you came to Circle. You've obviously got an interesting background from venture capital to a bit of policy work and even a stint as an EU parliamentary member. Now, what got you into stablecoins and why did you stay?
Yeah, so that's probably a longer story. As so many other folks in the industry, it turned from a personal hobby, personal fascination of crypto into my full-time job, roughly in 2018-19. I was working at Bitkom, the largest German tech trade association back in the day. And I was doing innovation and startup policy in Germany. That's where, around that time frame where crypto and stablecoins started to become a political topic on the scene, both at the German government level, at the EU level. There were, first reports and first considerations about how to regulate, how to legislate that entire industry. And that's where my boss and inside of Bitkom, everyone was asking, how do we address these questions? How do we engage with those regulators, policymakers? And first and foremost, who is going to do that? Yeah. I was happy to take the lead and have always looked back at that opportunity as the best decision. It was just a great timing for me to be able to be part of those conversations from the earliest days. And that's what I did for the first couple of years in the industry, right? I was leading crypto policy at Bitkom. Stablecoin always a major topic within those crypto policy initiatives, primarily also because Libra was launching out of Europe during that time frame. And I would say both from a policy philosophical level, stablecoins were always at the forefront of what I was doing on the regulatory side, also because it was always the primary focus for these, I would say, more public sector levels that wanted to understand how fiat money would work in the future on these new rails. And that coincided more or less also with market developments around that time when de facto stablecoins were just becoming the working capital of DeFi. And I'm sure you remember that. That's where, stablecoins really started picking up steam in 2020, 2021. And so that's where I decided to focus even further on stablecoins. And so one thing led to the other. I worked for a Berlin-based startup for a while that, funnily enough, now builds stablecoin infrastructure too. I worked in VC for a while, and then it coincided perfectly with Circle launching EURC, their Euro stablecoin, in summer 2022. That was basically also an open and public commitment for them to say, we're going to onshore that under MiCA. We're going to enter the European market as a regulated company. And so I came on board to help try and steer that process.
Awesome. Yeah, it's quite the journey. I like to joke, I have a little bit of an interesting stablecoin journey myself. I very much went down the crypto rabbit hole back into 2016, very much approaching crypto in 2017 as like a new asset class to invest in. I was running a small little hedge fund at the time, and I was an early user of stablecoins, moving money between platforms to do some arbitrage trading strategies. And I joke sometimes that I came to crypto for the investing and stayed for the payments, basically. But
so many others, right? It feels like the narrative's shifting.
No, exactly. Cool. Obviously, topic du jour today is MiCA. And I think I'd like to kick it off with a bit of a quote from a recent blog of yours, which I really liked, by the way. And it was something along the lines of, is the EU now a zero tolerance market for loosely regulated internet funny money? So let's unpack that a little bit, especially now that the first MiCA deadline for stablecoin issuers like Circle has just passed, or just recently passed in June. And the second one for crypto asset service providers and exchanges like ourselves is a month away. So you've said publicly that you think MiCA is going to reshape the EU stablecoin landscape. So can we just take some stock of where we are with MiCA at the moment and how you see this evolving over 2025?
Yeah, so this is really the finish line, right? I personally and many others have been working on that topic for years and years. MiCA was first proposed in 2020. And this year is finally the year everything enters into application. And as you mentioned, there were two big timelines, right? One for stablecoins with summer this year, end of June as the major milestone. And then at the end of this year, MiCA will finally kick in for all the CAS, the crypto asset service providers. And I think when we co-authored that article also with Dante Disparta, our chief strategy officer, what we wanted to convey is that essentially the market is really shifting from a largely nationally regulated market to a fully regulated EU-wide harmonized single market. And those rules, especially that stablecoin issuers have to face, and I can tell you that by experience, are really not an easy hurdle to overcome. We have spent now, I would say in total, roughly 2 years working on that license application, working on the regulatory setup that allowed us to then ultimately become the major global issuer, if you look at market cap, to have achieved that compliance, even if there's a number of other smaller players that achieved the same success. If you look at that timeline and those rules, it's safe to say it's not an easy feat, right? It requires very robust processes in terms of risk management, governance, prudential reserves, etc. And unsurprisingly, I and many others expected and predicted that there aren't too many stablecoins that will achieve that level of compliance and robustness.
Yeah.
And that prediction, I would say, at least up until now, has been true so far. There's, I would say, probably 7, 8, 9 of stablecoins under MiCA, so-called e-money tokens that are compliant by now, and all the others are not. And the consequence of that is that all the crypto asset service providers, so primarily the trading platforms, will essentially delist those non-EU authorized e-money tokens, or either they already have, or they will do so in the next couple of weeks as MiCA enters into application for them. And that's a huge change in market structure. You can probably, speak even better to that than I can. But right now you have so much liquidity in some of these stablecoin pairs that will shift over to these regulated pairs, right? And I think that's a shift in market structure we haven't faced in the EU, probably never, at least not in the last couple of years.
No, it's a really interesting one. And I have off the cuff spoken to a couple of other of the prominent issuers in the space and specifically guys that are looking at bringing their stablecoin into Europe and being MiCA compliant. And I think many of them have thanked you for trailblazing the path to getting that, to showing them how it's done. So I think that many of them are in the background thanking Circle for showing them the clear pathway to do it.
Yeah, we'll always jokingly, we always say we're a regulatory guinea pig, right? For many jurisdictions of the world, because it's a first of its kind, not only for the issuers, but also for most of the regulators out there. And especially when it comes to global stablecoins like USDC and others, we often find ourselves in a position where we have to trailblaze a certain operational regulatory setup that ultimately, hopefully, will also pave the way for many others.
No, for sure. How have you thought there's definitely been some murmurs in the market, despite all the benefits that MiCA brings? There've been a couple of prominent voices in the stablecoin market have been talking through some like unintended consequences of MiCA, specifically as it relates to reserve management and having to place those reserves, who are, if you park them directly in treasuries, you've got them one-to-one. If you have to park them in a bank, this into a fractional reserve bank can probably introduce some systemic risks. How have you guys thought through that issue, or those perceived unintended consequences?
Yeah, so the first thing I would say on that is that, as any other regulatory framework, MiCA is certainly not perfect. And I'm not known for being a person that only speaks positively about EU regulation and generally. Definitely not so. I largely agree with many loud voices today in the European Union, like Mario Draghi and others, that think that over-regulation is a risk, right? And at least in some industries and in some respect, cutting red tape makes sense. However, for MiCA specifically, I think if you look at the benefits, they largely outweigh the trade-offs here. And we also have to treat MiCA in that regard as a V1. It's essentially a first of its kind. It's been adopted now, but it will be an iterative process over the next couple of years. Certainly, there's some of the prudential rules you're alluding to that I think if MiCA was to be negotiated today or next year, they would have ended up differently. Yeah. And my hope and my expectation actually is that as MiCA is being reviewed and rediscussed in the next couple of years, the first interim review of MiCA is already next summer. People will look at the market, will look at the feedback from the market, what worked, what potentially didn't work, and address those issues. And I think having one single harmonized market, having the regulatory clarity for stablecoins is the most important piece. And then some of the more specific requirements that we would also like to see addressed in the future will hopefully be addressed in the interim review and then finally in the complete MiCA review in a couple of years.
No, 100%. I think all good regulation is that sort of iterative regulation and taking in market feedback as it goes. So I think that's a really good piece. I think obviously EU and MiCA has been setting trailblazing, so to speak, and coming to market with this. What do you think the UK and even the US can learn from MiCA? You know, what are some of the things that they could take away and implement themselves as they think through bringing some broad stroke stablecoin regulation to market in those two markets?
Probably they should think about how they can leverage the second mover effect here, right? They should probably look very closely at MiCA, the regulatory framework, look at the pieces that work well, and then try to improve on those points and those specific requirements that might actually be harder to operationalize from an issuer perspective or from a crypto asset service provider perspective. So I think one thing that the UK, for example, looked at early on is, and we'll see if that ends up being part of the final rulebook, but they looked into how potentially global issuers could distribute their stablecoin in the UK without necessarily being obliged to issue it out of the UK. And so I think that's something that will increasingly be important for the jurisdictions, for some of the jurisdictions, how to make their rulebook compatible with a global stablecoin that is already regulated, licensed, reserved, and issued elsewhere. Yeah, I think that's something that was not at the center of MiCA discussions in the early days. And I think that's something that all the jurisdictions that are contemplating those rules today are thinking about. But I mean, you're based in the UK, right? So you might, I don't know, do you have any point of view of how to best leverage that position?
No, I think exactly what you said there. That second mover advantage is really important. Take what worked as you write your legislation, look at what the market fed back to the EU regulator as they went through putting that legislation together, maybe make some positive tweaks, have a bit more dialogue with the market and that sort of thing, and then come out with a second mover, slightly better piece of legislation potentially. But I think also on that front, and as they think through that, what I've seen, at least talking to people in the market and the industries, is there's this bifurcation between crypto and stablecoins happening. And I'm interested to get your view on how the discussions you've had with regulators have been. It's around, they're going crypto, stablecoins, let's look at them differently. Stablecoins, plenty use cases, crypto, there's the speculative use cases, there's the investing use cases, but let's first go regulate the stablecoin piece, which we know how to do potentially if you apply payments regulations to that, and then look at the crypto asset regulation and the more complex regulation, like how do you regulate DeFi? Do you even do it? So, I mean, has the EU regulator approached it the same way? Because the market, seems to be approaching it that way. I wonder if in the conversations you've been having with regulators, they're thinking about the same way as well.
I would say from a narrative point of view, for sure, it has been a completely separate conversation. The stablecoin part, so the fiat referencing crypto asset part, and then the Bitcoin unbacked crypto asset part. I would say if you look at the end result, obviously also from a regulatory point of view, they're treated completely differently. So a stablecoin under MiCA, if you look at what we issue, a fiat-backed stablecoin, an e-money token, is essentially treated legally as fiat money. It's deemed to be e-money in MiCA. And so legally speaking, it's actually comparable to payments instruments that already exist. If you look at your PayPal wallet today in the European Union, that's e-money, and stablecoins under MiCA are treated and deemed to be e-money in the same vein. There are slightly different requirements though, but it's a completely different bucket from unbacked crypto assets. Also looking at, for example, disclosure requirements, the MiCA white paper for unbacked crypto assets is a really, I would say, low-level pragmatic regime. That is actually, if you ask me, I think one of the best parts in MiCA that allows all kinds of token issuers to disclose who they are, how the tokenomics work, what the legal and economic assurances are with respect to that token, and then to just launch it without a huge amount of regulatory requirements and restrictions. Whereas for stablecoins, issuers have to face a number of various conditions and requirements, have to get a license, etc., etc. So I think there's a strong separation both from a narrative and also a regulation point of view, but it ended up being subsumed in the same comprehensive MiCA framework.
No, I think it's important for innovation to flourish around, as you say, an easier path to market for these kind of non-fiat backed stablecoins, to keep that innovation flywheel going, for sure. But maybe to switch gears a little bit now to what we like to think of one of my favorite topics in stablecoins today is stablecoin payouts. So when I think about stablecoin payouts, or just stablecoins more generally, stablecoins aren't really like other traditional currencies in some ways, and I say that because they're kind of part currency, part payment rail, and potentially now with stablecoin payouts, part payment method. So what we've seen at BVNK is that they're being used as a payment rail in the B2B context. Think about a business settling another business cross-border, for a PSP settling a merchant. This is a better rail to move money faster, replacing things like SWIFT. But in the B2C context, we're starting to see it being used more as a payment method, specifically in emerging markets. When we look at our business and across the use cases we enable between stablecoin pay-ins, payouts, and then the more B2B use cases in stablecoin settlements, we find that stablecoin payouts is one of our fastest growing and most exciting use cases. We're helping global fintechs like Deal, some very large global PSPs, add stablecoin into their payout stack as another payment payout method, alongside the more traditional payment payout methods like push to card or push to account or even push to digital wallet. And this is also really where we've been deepening our partnership with Circle to really get USDC into the hands of as many end consumers as possible globally around the world through this specific use case. But what I'm quite interested is your take from a regulatory perspective. How have regulators approached this use case, given it's by trying to regulate a global ubiquitous payment method versus just a stablecoin or fiat money on the blockchain? The way I understand it is the conversion from fiat to stablecoin is actually the regulatory piece, not actually the payout itself. But that's my very ill-informed regulatory opinion. But Joe, what are your thoughts here? How do you think through like the consumer use case and that specific, more consumer-driven use case of stablecoins from a regulatory perspective, at least?
Yeah, no, I mean, there's a ton in there. I think fundamentally, I couldn't agree more with you, right? Yeah. I think the momentum around stablecoins being used as new payment rails for payouts is real. Also, especially after the Stripe acquisition of Bridge, and even Patrick Hansen and others saying that stablecoins are the new superconductors for financial services. I think there has been a real hype, but underlying also real adoption in that case. And I think you can probably speak better to that than I can, but fundamentally for businesses, if you think about they have whatever global employees, or they have to pay international freelancers in USDC, for example, it's just better from an experience point of view, from a cost point of view, than if you go through traditional cross-border bank wires, for example, using Swift. I think it's faster, it's cheaper, it's more transparent, right? So it inherently makes sense for these businesses also to rely on these new payment rails. And similarly, I think on the receiving end, and most of the crypto startups, and I've worked with some of those, it just makes more sense for some of these receiving individuals to prefer USDC, for example, even over bank deposits, because they typically use those stable coins to lend and, for example, get some yield and returns on those assets. They use it to invest into other crypto assets. They use it to swap instantly back into fiat and use it, or even pay with those stablecoin Visa and MasterCards today. So I think by now we have built such a big ecosystem around stablecoins that the barrier to sending and receiving them across the world is almost inexistent at this point. And the last point, and that's a tricky one, we could probably spend quite a while talking about that, but from a regulatory point of view, it's tricky. Because you mentioned, obviously, the fiat stablecoin swap layer, that is usually regulated as a fiat to crypto exchange. You need either broker license or similar. The transaction, the transfer itself, that depends really on the details of that, at least in the European Union. That's still being discussed and negotiated at the Parliament and Council level. Because if an e-money token is treated as e-money, it raises the question whether an e-money token transfer falls under the PSD2, so the Payment Services Directive 2. That would go along with quite a number of requirements with respect to fraud mitigation and finality and governance, etc. Right now, I think they're discussing on how to best ensure that there aren't duplicative requirements for these e-money token transfers, and that the MiCA framework prevails for most transactions we know today. But I personally wouldn't be surprised that if in the future, if you use an e-money token, for example, to buy some goods and services at your local merchant, or even online at your favorite online store, the intermediary you use that performs that transaction for you, that buying of goods and services, I think for these kinds of specific transactions that are clearly payments in nature, they will need to comply with all the related payments rules, in my opinion.
Yeah, I think that's definitely the direction of travel that we see as well. Look, time's almost up, but I do have one final question. It's getting towards the end of the year. If you could impact one key piece of policy or regulation going into 2025, what would that be? Basically, it's what's on your Christmas policy wish list for 2025?
Early Christmas presents. So it's something I alluded to earlier already. I think what's important now, as every single major financial jurisdiction comes up with their own stablecoin framework, one thing that is increasingly important is global alignment and global equivalence and recognition of licenses and rules, right? Because if you think about stablecoins, it's an inherently global internet native payments instrument. And what we want to avoid at all costs is that somehow that global protocol for money, that global liquidity and accessibility gets fragmented through national rules for stablecoins that would require, for example, global issuers to hold localized reserves and to follow localized payments rules, etc., etc. And so I would say it's not a conversation for today necessarily, but in the medium to long term, let's say in a couple of years, when the US, the UK, Europe, Singapore, all the major jurisdictions have their own frameworks for stablecoins, I think we will need a regime that will allow an issuer that is licensed somewhere with a regulated reserve in one place to distribute and use the token in other jurisdictions without necessarily duplicating the issuance process, the reserving process, etc., in that second jurisdiction. There needs to be a way for a jurisdiction to say, I trust those regulators and supervisors in that place, and you can use the token here. And we build certain insurance and disclosures into that regime to guarantee long term that those truly global internet native assets remain these truly global internet native assets, and that we don't build up the same national fragmentations, national barriers that exist in the payment regime that we know today, right?
No, for sure. Great wish list for 2020, 2025. Look, Patrick, this has been great. Thanks so much.
Thanks, Chris. That was fun.
Yeah. So just to wrap up here for the viewers, this is Currency Live, hosted by me, Chris Harmse, brought to you by BVNK, the leading stablecoin payments infrastructure provider. We'll see you next time, where we're talking to a leading crypto VC about the payments innovations that they're betting on. Bye for now.